Welcome to one more video. Now we are continuing the discussion which we had regarding the free zone and designated zone benefits on corporate tax. As I said, there is a very good intertwining linkages between the designated zone from a corporate tax perspective and VAT. Now let's look at what the Ministerial Decision 265 says for distribution of goods or material. Now it says it includes buying and selling of goods, material, component parts, or any other item that are tangible or movable, or may include the importation, storage, inventory management, handling, transportation, and exportation of those goods or material. Two. Now this is where I want to bring the highlight point. Customer that resells such goods or material or part thereof, or processes or alters such goods or material part thereof for the purpose of sale or resale. Now there is a discussion happening whether if we supply a material to a manufacturing unit under the designated zone, will that qualify for the benefit? Now let's dwell around and look at the VAT also under Article 51 of designated zone. It also says something similar, which says where the goods are made in the designated zone to a person to be consumed by him or by another person, then such supply of goods shall be in state, except in the following situation. Now, what is the following situation? That is, the purpose is to incorporate the goods into attached to the goods too, and the goods become part of or are used in production of another goods in same designated zone, and such goods are not consumed. Now, compare both these definitions. There is a very interlinking things which is being referred to, which is on consumption. Now let's dwell and try to break into two portions. One, when I supply goods for a production, do I need to look at the distribution of goods section? I am providing the goods either under custom suspension, or the importer on records is not the seller in the designated zone. In both cases, you may qualify for the benefit of a free zone. Now, when you are looking at resale and sale, look at whether the goods are being produced for or used for the production of another item. If yes, then there is a good possibility that you'll get a benefit of a qualifying free zone and you will be allowed to take 0% benefit. Always try to break the elements from a corporate tax perspective into production, which is a separate section, and distribution, which is a separate section. So far on underline, the goods are under custom suspension, taxes and custom duties are not paid, then your goods and transaction is out of scope from VAT perspective. If it is out of scope from VAT perspective, there is a very high probability, unless you breach the concept of beneficial ownership, the transaction will be classified under the corporate tax as a qualifying income. So that's it for this small bite.